Hey there and welcome back to our channel. Think about those giant, shiny office buildings in your city for a moment. Have you ever noticed that most of the lights are no longer on, and that entire floors are completely empty? This isn't just an illusion. It could be the sign of a silent economic storm. Don't forget to like this video and subscribe to our channel to understand today's biggest financial risks. Today we're breaking down the massive commercial real estate crisis behind the so-called death of the office, and whether it could trigger the next major banking crisis. The problem is this: office vacancy rates in major US cities have reached record highs. But this isn't just an issue of empty space. There are billions, even trillions of dollars in loans tied to these buildings. And as the buildings stay empty, paying back those loans is becoming impossible. The root cause of this situation is the remote work culture that entered our lives with the pandemic and became permanent. Many large companies realized they no longer need offices as large as they used to and began downsizing their space. This is the main reason behind the record vacancy rates and falling rents, and this is where things get dangerous. Hundreds of billions of dollars in commercial real estate loans, which were taken out in the past when interest rates were very low, are now maturing in these exact years. Analysts call this the wall of debt. These loans need to be refinanced at today's much higher interest rates. But there's a problem. With empty buildings and less rental income, the value of these properties has also plummeted. Consequently, banks are reluctant to refinance these risky loans. This creates a huge risk of default, meaning the loans can't be paid back. So, who's holding this ticking time bomb? While building owners and investors face massive losses, the real major risk lies with regional banks. Unlike the 2008 crisis, a large portion of these commercial real estate loans are concentrated not in giant investment banks, but in the smaller and medium-sized regional banks across the U.S. This makes them particularly vulnerable. This situation could trigger what's known as a doom loop. Loan defaults lead to the failure of regional banks. Bank failures lead to a tightening of credit across the entire economy, and this, in turn, brings about an economic slowdown. In the end, the future of our cities and a significant part of the banking system is tied to the fate of those empty office buildings. So, what do you think? Is remote work here to stay? Are you worried about another financial crisis? Share your thoughts with us in the comment section below. If you found this video helpful, don't forget to give it a like and subscribe. See you in the next video.